Hello and good morning and welcome to the Capital Market Forecasts. My name is Steve Puckett. I'll be your presenter for this quick presentation on capital markets forecasts. Again, Happy New Year. And in the new year, we typically have all of the investment banks come up with their analyst estimates for the S&P 500 for the year end. So I want to in this quick presentation, talk to you about how successful they've been in the past and what they are anticipating in the future. So again, go over the 2025 capital market expectation, talk about historical estimates, talk about the 2026 forecasts, and then some key takeaways as well. So again, with these market forecasts, again, just remember they are data driven based on the stock market averages 7 to 9% per year rate of return. So that's typically a starting point for most of these Wall Street firms. Again, each of them have their research teams that will make assumptions, again, based on growth, inflation, valuations. And again, it's designed for perspective and again, to help try to predict outcomes. Again, just remember with all of these outlooks, various Wall Street banks and investment managers can come up with different conclusions. Many have different assumptions. There are always unexpected events like Venezuela, geopolitical, economic, and market shocks that can affect outcomes. And outcomes can diverge over time. So with that being said, just want to look at the last 7 years of analyst estimates. Again, the blue bar is the average analyst estimate, and the orange bar is the S&P 500 actual rates of return. And you can see the blue bars tend to be always positive. So the analysts almost always estimate a positive stock market return, and most of them are in that 5 to 10% range. Again, as you can see from the actual outcome of the S&P 500, we've had 6 positive years over the last 8 years and 2 negative years, with 2022 being a negative 19%. So you can see overestimate 3 years, underestimate 6 years. And what are they estimating for 2026? Well, I wanted to let you know that all Wall Street banks and investment managers are all estimating a rally in the stock market. So as we close the year at roughly 6,800 on the S&P, all of them have a positive return estimate for year-end 2026. With the lowest manager, Bank of America, having a 7,100 price target for year-end S&P 500. And the most bullish case is Oppenheimer and Company with an 8,100 S&P 500 year-end price target. But again, almost all of them are bullish, and the average is in that 7,500 range of S&P returns. And again, just want to let you know kind of what we're thinking in terms of the outlook. Obviously, early 2026, we do think growth will be coming, will continue. Tax returns are expected to be approximately $1,000 to $1,200 more than last year's tax returns. The Federal Reserve policy, Jerome Powell, his leadership will end this spring, and Donald Trump will be appointing a new Fed policymaker, and we anticipate that will be very pro-low interest rate environment. Again, interest rates, we do think that there will be more cuts coming with the Fed funds rate, anywhere from 2 to 3 Fed cuts in 2026. Equity market and artificial intelligence continue to be a structural drive, continue to expand the market, and we are seeing profits in those companies continue. International markets have been very strong. We do anticipate them continuing to be strong. Alternatives have been performing very well, specifically commodities, gold and silver. And again, just remember, we are at high multiples, so we are in a very high risk stock market. And again, more importantly, again, focus on long term. Again, stay disciplined. If there are any short-term pullbacks, that may be an opportunity to buy on the dips. Again, remember, historically over time, stocks have delivered solid returns. But again, that is correlated to the lower the valuation of stock markets, the higher potential rates of return. When you buy the market at very stretched multiples, that does have a long-term correlation of lower rates of return. But again, consistency, diversification, and patience. Stay invested in your positions to benefit from the market over the long period of time. And again, we are here for you. Again, our team is here for complimentary one-on-ones, guidance, retirement planning, investment decisions, and personalized support for each of your participants' goals. Again, please, if you have any questions or would like to schedule a complimentary one-on-one, please reach out to us at info@fiduciarypp.com. Again, info@fiduciarypp.com, and we would love to talk to you about your situation and your concerns and questions. Thank you very much and have a great day.